Alright, guys, let's do this. Let's talk about the currency war today. And we need to understand this because it goes deeper than just the dollar falling or de-dollarization. Now, everyone and every country is watching the reserve currency get hammered. They know Trump's actions have consequences and the dollar is getting less popular than ever before. Now, when countries around the world trade less with the US, demand for dollars fall. And when Powell moves to cut rates and Besson keeps borrowing money, the currency gets debased even further. Now, premiums for dollars are starting to crash. Back in 2022, investors had to pay 40 basis points more to acquire dollars when exchanging currencies. It was valuable to acquire it, especially when rates were going up. But now the situation is reversing. It's very different today. In just a few months, we could enter a world where you get a discount or you get paid to acquire dollars. The currency is so undesirable that the market will pay you to exchange something else for it. Now imagine exchanging euros or even a Japanese yen to get dollars and getting a price. It's quite unthinkable, but it's likely gonna happen. And why would someone give you dollars and actually give you more to hold it? It's because its value is about to evaporate in the weeks, months, and years to come. Investors' appetite for dollar assets like treasury bonds are starting to weaken. Not a surprise when we realize interest costs on the national debt alone has hit $1.2 trillion. It doesn't get better when you have Scott Bessent trying to find arcane ways to drive demand for his debt. Now he's betting that trillions of dollars will pour in from crypto investors into treasuries. The Bitcoin and Ethereum bros will join hands and save the US bond market. But I have very big doubts about it. And these people, they understand the concept of dollar debasement. It's a desperate move, but Besson is trying his best to sell every holder of US Treasury bonds the dream. And it's nothing more than a weird reassurance campaign using crypto as the bait.
Coins could end up being one of the largest buyers of US treasuries or T-bills. So all of a sudden, if you are using a stable coin in Nigeria that's backed by the US dollar, you don't actually have to have dollars. It's on your phone. You can transact. So I think there's a very good chance that crypto is actually one of the things that locks in dollar supremacy.
So that's the story he's trying to peddle. Besson is becoming a weird combination of a salesman and a storyteller. It's very bizarre, but there's one country that is not buying it: China. They see the cracks in the reserve currency and they're going to take advantage of it. And why wouldn't they? It's payback time for Beijing. Now, challenging the US economy means challenging the dollar. And to do that, China is going to use their own currency, the RMB, to throw a big spanner into the entire system. Now, the Chinese central bank has fixed their currency to a 9-month high after Powell said rate cuts are coming. And this might seem innocuous to most, but a stronger yuan is an offensive move against the dollar. And if this was a game of chess, China basically put the US financial system into a check position. It's not a checkmate just yet, but you quickly realize the damage that could arise from this. Now, the PBOC has strengthened the yuan fix by a significant amount, and we are seeing a 20 basis points move to make the Chinese currency stronger than the dollar. And in other words, China is making the RMB more valuable than the USD. And I can already sense the confusion here, and this goes against what many people think of the Chinese economy, which is an exporting giant. And here's the common line of thinking: why would China strengthen the RMB? Won't it make exports more expensive and ruin China's export-based economy? Now, weaker currency would help Chinese exports, right? And this is where Beijing might have figured out the game. The dollar falling still isn't enough to save US exports to the world. China is still getting cheap Russian oil and commodities. Their input costs are still very much lower than the US. So even if the yuan goes up by 2 or 3% down the road, the cost savings from buying Chinese goods is still very significant. But in the US, it's a totally different story. Trump's tariff war has cornered his own economy and negates the falling dollar. And it's critical we understand this because China has a lot of leeway here. The US effective tariff rate is now around 17%, which means goods coming into the United States are now 17% more expensive than before. It's not just people at Walmart that are suffering. US consumers are definitely in a world of pain, but so are the industries and companies looking to make stuff in the US. And once we unpeel this, you realize that the dollar falling is a double whammy that makes the tariff worse. China and many other countries around the world, they understand this. This chart shows us the effective tariff rate the US has on their major trading partners. Now focus on the countries that ship intermediate inputs, the raw materials to the US. And this includes Indonesia, India, chips from Korea, and electronics from China. And most of them are 15 to 20% at the minimum, which means Trump has effectively created US manufacturing with his trade war. And because the US imports a ton, weakening the dollar will make the input costs higher. The dollar crashing by 15 or 20% won't remedy the situation. It might just make things even worse. Now, the problem isn't the US dollar per se, it's the existence of the stupid tariffs themselves. And it should be obvious by now. China strengthening the RMB introduces one very big problem for the US financial system. And if you think US assets are in trouble, you ain't seen nothing yet. According to Goldman Sachs, a stronger RMB is expected to boost Chinese stocks. And this is a very important statement that we can't gloss over. And let's break this down. Every 1% appreciation of the yuan versus the dollar can boost Chinese stocks by 3%. A stronger Chinese currency means improved corporate earnings and, more importantly, stronger foreign inflows of money. And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to buying gold and silver, I trust Indigo Precious Metals in Singapore. They have made investing in precious metals safe, fast, easy, and simple for both small and large scale buying. I've been stacking gold for over a decade now, and I've learned two things when buying. You want to buy authentic gold bullion, and you want to buy it at the lowest premium possible to stretch your dollars even further. And I'm glad to say I found both of this at Indigo Precious Metals. Indigo Precious Metals is a leading retailer in Singapore. They specialize in physical gold, silver, and platinum. They are my one-stop shop when it comes to buying bullion. Their prices are sharp, and they have the best brands on sale, and I can test the gold on the spot. So if you're looking to make your first gold purchase, Indigo Precious Metals is the best place to start. Whether it's 1 ounce or 1 kilo, this is the reputable dealer you are looking for. So take action today. Click on the link below and enjoy a discount on your first purchase with the code SEANFOO. Start your gold stacking journey today. And if the dollar keeps crashing and China continues to remain firm on their RMB fixing, this will create a big vacuum effect for global money. And as an investor, it makes total sense here. Whether you buy a US or Chinese stock or bond, what is the underlying asset? Let's just think about it, right? At the root of the investment, it's the currency itself. And that's why even though the S&P is up by 9%, as a foreign investor, you still lost money because the dollar has collapsed by almost 10%. It's this fundamental reason why China wants to keep their RMB strong. It is to move global capital away from US markets to the Chinese financial system. And their exports are secure, and it's time to bring the fight to US assets. Now, when the RMB goes up against the dollar, Chinese equities will rise. Money leaves Wall Street and piles into stocks in China because now there's a double tailwind that's helping investors earn more money, a bigger return. It's the same trend over the last 2 years. The trade war has just made it easier for China to maintain RMB strength. Trump's tariff war on the world has made countries reliant on cheap Chinese goods. So for Beijing, exports collapsing isn't a fear. But for the US, this poses a big problem. American stocks are probably up by a huge amount of margin debt. We are now at stupendous levels that are simply shocking. US margin debt has surged by $14.6 billion in July to over 1 trillion. So a ton of borrowed money is fueling the rally in US markets. Now on the way up, this is fine. But on the way down, when money starts leaving US assets, this is a powder keg just waiting to explode. And suddenly you have $1 trillion in margin waiting to evaporate. So, yes, China holds a lot of cards against the US. The American markets are so hyper financialized that it isn't a joke anymore. But Beijing still has more cards reserved for Trump's economy. And this circles back to China's grip over rare earth metals that the US wants. And how do we know this is a big issue? Well, it's because Trump just threatened China again. Now, the reports just keep getting bizarre, but let's take Trump's words at face value because we don't know if he would or would not do anything. It's a coin flip at this point. Now, Trump is telling China to give the US rare earth magnets, and if Beijing doesn't play ball, he will jack the tariffs back up to 200%. And it's getting crazier than before, it's getting crazier than that. Trump believes the US has much bigger leverage on China in this trade war. And if he doesn't get the magnets, he will weaponize airplane parts against China. Now, if I played those cards, that would destroy China. I'm not going to play those cards. Now, somehow he believes US airplane parts and Boeing jets are enough to make Beijing cower and hide in a corner. Here's the problem with this. Eventually, COMAC, which is the Chinese state-owned air carrier, will catch up. In the short term, China can work more deals with Airbus, which is in the EU. And in the long term, this will just make Chinese aviation more self-sufficient. And once that happens, Boeing will be facing a world of hurt. The duopoly of Boeing and Airbus will be threatened with a third giant, and it won't be a good ending. But in rare earths, China is starting to tighten the screws. They aren't going to be threatened without having a contingency plan. They are tightening their grip on rare earth supply quotas. It's already a controlled sector, but China is now going to squeeze it even further. Everything from rare earth mining to refining will be tightly controlled. So now China can slam down production or exports to near zero in a hurry to punish Trump's economy. So we have a Mexican standoff. Not really a Mexican standoff because all the cards are with China. The trade war isn't done, it's the calm before the storm. China's preparing for Trump's ultimatum and any other new surprises from Washington. And here's the funny thing, guys. Could Trump have prevented this? Not immediately, but he could actually position US industries to be self sufficient in the future. Maybe not in the next 5 years, but decades down the line, it's very possible. But it's no longer feasible now thanks to his tariff war. It's another good example of blocking the exits to make a point. Now, Brazil actually was talking with the US to develop rare earths. The plan was to get US money and assistance to build up Brazil's vast amounts of rare earths locked in the ground. This is the second largest stockpile in the world, and yes, it will probably change everything in the next 5 to 10 years. Around 20% of rare earths are controlled by Brazil, and it's within the Western Hemisphere. The US could actually be self sufficient in rare earths without China. But what did the bunch of geniuses do in Washington? Of course, we're talking about Lutnick, Besson, and Trump. Well, the three heroes decided to hit Brazil with big brutal tariffs. It's even worse than China. A 50% tariff basically makes developing any mines impossible. And this is the level of sophistication in the White House, high IQ. And that's why China and BRICS are running circles around Trump. And when you peel back the layers of the trade war, it's actually a bigger disaster than we thought. People pay more, and US supply chains are taking a big step back, at least for the next 3.5 years, probably more. But let me know what you think. Will China continue pulling money away from US markets? And will China give Trump more rare earths? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.